Good morning, traders. It's Friday, January 24th. Taking a look at the charts, we got the SP 500, and today the market is moving higher again, threatening to poke to new all-time highs. Yesterday, the market did sell off a little bit. We talked about this in pre-market, how it was flirting with this 5-day moving average, and it dipped down below, kind of cleansed the market a bit. It reversed and had a pretty strong bounce in price. Now, if we look over at the short-term trend analysis, and we just look at the intraday. This is the 30-minute chart. Yesterday, the market gapped down. It got real close to this oversold territory, and the market recovered back up. And you can see we're stuck between oversold and overbought. And we are in an uptrend, so naturally we're going to be riding this overbought territory. And as the market matures, these lines obviously will shuffle their way higher or lower depending on the market internals and things like that. So overall, stocks continue to move higher, and we're seeing money kind of flow out of the safe havens a little bit. If we take a look over at bonds actually sold off quite a bit in pre-market trading. They've recovered back up to these highs. We're flirting with this news-based spike right here. We're kind of trying to get through that level, but overall we have been seeing money shift into bonds, and they're holding their ground fairly well, but we are seeing the precious metal sector under some pressure. Now, if we take a look, let's just go back to the equities market here. Here's the SP 500. It is starting to get pretty long in the teeth. We can expect a real sharp pullback at any point. And money has been flowing into bonds, which I just showed you, and also utilities. You can see money has just been piling into the utility sector. And this is seen as a real strong safe haven play, people trying to get defensive. And this is what we've been, I posted this the other day in an update, but more or less we're working on a new market gauge it'll move based on a 20 to 40 day cycle where money is flowing and kind of how we should be kind of attacking the markets. And right now we are in this defensive mode where we're seeing certain asset classes outperform. Utilities are on fire. They're kind of the early defensive play, and as things mature, we should start to see precious metals pick up speed. Eventually, we get into more or less a downtrend in equities, and that's when you can do inverse or focus on getting into bonds. Metals should still hold up and potentially rally, but we are in this kind of defensive mode right now, and the market is on the verge of potentially rolling over to a downtrend. Now let's go take a look over at metals. Gold down 0.5% this morning, still holding up in this tight flag, holding on the 20-day moving average. I wouldn't be surprised again if we see in A, B, C, a lower low here in the market. Silver is already doing this. We can see it sold off, bounced, and made a lower low. And silver, if gold continues to move lower, we'll likely see silver continue to move lower. And we'll see if they can get some traction here. But overall, they are in consolidation mode. The gold miners yesterday were posting some pretty nice gains. We broke out to the upside intraday wise, couldn't hold it. And if we take a look at the intraday chart of gold miners, here is the chart we've been following here, and you can see yesterday we poked up through it for about half an hour, 45 minutes or so, and then big money came in and slammed the price back down, more or less a little bit of a head fake from the looks of it. The last time we poked through it, we saw a big wave of selling as well. Overall, we are still holding up in this range here. It is trying to break out. Overall today, we're going to see it looks like it's going to open slightly lower. Hopefully we'll get some upward traction. Again, there is the potential that we have this A, B, C wave. We see something come down into this area here, which would fall in line with previous price action where we saw actually the price, you can't see on this chart, but there's a range here in price where it chopped around previously on the chart. So that would act as the next support level if price starts to go and fade down here to break this low and kind of cleanse the market with panic selling, and that would put in potentially a big bottom. So we're letting the market do its thing. It's still consolidating. Took a run at breaking out, couldn't do it, and we're going to let it continue to kind of work itself out. Let's take a look over at energies. Natural gas down 2% this morning, still volatile, trying to carve out a bottom here. It is oversold. We're seeing some money kind of step in. We'll see how things unfold. Overall, there's potential here. We might get shaken out of our play, out of our U and G play. It's a very small position because This is going to be real volatile. Hopefully we'll see the market step back in and we'll start to see it rally. Overall, it's trying to carve out a bottom this week with pretty good volatility. It's the last day of the week, so we'll see if there's short covering into the close, hold the market up. I don't know if people will want to hold a short position over the weekend. If the market's down this much, they might want to lock in gains, and that could create a rally in the today or into the close that closes fairly strong, and then on Monday we could see a gap higher. But at this point, it's still holding under the 5-day. We are seeing signs of a shakeout, but it hasn't fully reversed just yet. Looking over at crude, yesterday down again. Today it's down, testing this blue support level. Is pretty critical support level where it's tagged twice. We saw very strong bounces off that level. It is testing that again. Again, the next downside level will be this 52 area if that level breaks going forward. Anyways, that's it for this morning, and I'll talk to you in a little bit.